Good morning and welcome to today's board meeting. We have one item on our agenda for today, what should be the final report out from our team related to the leases post-implementation review. With that, let me turn it over to Ashley and our team to start our discussion this morning. Good morning.
All right, thanks, Rich, and good morning, everyone. The purpose of today's meeting is to discuss the post-implementation review, or PIR, activities performed for the Leases standard and the next steps of the PIR process. As a reminder, the PIR process has three main objectives: to determine whether a standard is accomplishing its stated purpose, to evaluate the standard's implementation and continuing costs and related benefits, and to provide feedback to improve the standard setting process. At the September 3rd board meeting, the staff updated the board on PIR outreach, monitoring activities, and academic research conducted through July 2025. Since that meeting, the staff has continued their work on the Leases PIR, and 4 key Leases outreach activities have occurred, including the second Public Leases Roundtable, the Private Company Council, or PCC, and AICPA Technical Issues Committee annual liaison meeting, the September PCC meeting, and a joint FASB ISB educational meeting. The staff has prepared a draft of the PIR report with the following areas of emphasis: a summary of key PIR activities, benefits and costs, challenging application areas, and standard setting process observations. Like Rich mentioned, today's meeting is intended to be the last Leases board meeting before the conclusion of the Leases PIR. So the staff will provide a brief overview of the Leases PIR process and findings expected to be included in the PIR report. The Leases PIR process began in 2016 upon issuance of the standard. The FASB staff and board engaged in many activities to support the review of the standard. This included addressing implementation issues submitted through the FASB's Technical Inquiry Service, engaging with approximately 1,600 stakeholders, issuing ASUs to clarify or make targeted improvements to the standard, and holding public board meetings to discuss stakeholder feedback and PIR updates. As it relates to lessee accounting requirements, overall, stakeholder feedback has indicated that the Leases standard achieved the objective of providing investors and other users with more useful information about a lessee's leasing activities. Although feedback from investors on the usefulness of lessees' recognized lease assets and liabilities has been mixed, for many investors, reported lease assets and liabilities are a useful starting point that improves comparability of leases across entities. Additionally, almost all investors agree that the disclosures provided under the Leases standard are an improvement to those provided in previous GAAP. However, the cost to initially implement the lessee requirements, along with the ongoing cost to apply those requirements, were significantly higher than expected at issuance, primarily because existing systems and processes needed to be changed to account for operating leases on the balance sheet, and additional resources were needed. As it relates to lessor accounting requirements, investors and other users are generally satisfied with the information provided under the Leases standard. In addition, because most of the lessor accounting requirements were substantively unchanged from previous GAAP, most lessor entities did not incur significant costs to initially implement those requirements or incur significant ongoing costs to apply the requirements. However, after the issuance of the standard, the board issued several updates to ensure that lessor financial accounting outcomes remain consistent with those under legacy GAAP. As part of the PIR process, the staff has assessed whether improvements are needed to the standard setting process. Based on feedback received, we have identified 5 areas that we expect to highlight in the draft PIR report. The first area relates to converged standard setting. The FASB and ISB collaborated extensively to develop a converged leases standard. Although the FASB devoted a significant amount of time and effort to develop converged requirements, the boards ultimately diverged in some key areas. The process to develop converged guidance takes additional time and adds cost and complexity to the standard setting process. Feedback from stakeholders during the Leases PIR process indicated that convergence is viewed as a benefit in standard setting. The second area relates to transition guidance. Transition alternatives and practical expedients provided in the standard that were intended to be helpful resulted in added complexity by permitting a number of accounting alternatives that are expected to require detailed tracking for years beyond the adoption date. The third area relates to effective dates. In response to stakeholder feedback, the board deferred the effective date of the Leases standard twice, in 2019 and again in 2020 for non-public entities. Since the issuance of the Leases standard, the staff has implemented new processes to better anticipate the length of time that it will take for a final standard to be issued and implemented, and better evaluate how that timing affects the selection of the effective date. The fourth area relates to systems and process assumptions. Stakeholder feedback indicated that lessees would be able to apply the Leases standard utilizing their existing systems and processes. The board used that feedback in deciding on fundamental aspects of the lessee model. However, there was a significant gap between what was communicated to the board about the adequacy of systems and processes and what was actually experienced by preparers. And the last area relates to defining the objective of a project. Throughout the active deliberations of the Leases project, multiple exposure drafts were issued that reflected major variations in the objective of the project for both lessor and lessee accounting compared to the eventual changes in the Leases standard. The length of time to complete the active deliberations, the turnover of FASB members during the period, and limited stakeholder agreement with the board's objectives throughout the project meant that different financial reporting outcomes were pursued in those exposure documents. The multiple exposure documents affected the overall timing of standard setting and raised challenges in evaluating stakeholder feedback. And now moving on to next steps, the staff notes that generally, stakeholders have indicated that fundamental changes to the Leases standard are unnecessary, especially changes to the guidance that would require modifications to systems and processes. However, suggestions have been made by stakeholders throughout the Leases PIR process for potential improvements to the Leases standard, particularly by private company stakeholders. The PCC is considering improvements to the Leases standard. The staff will continue to actively support the PCC's work in this area and will evaluate other targeted improvements to the Leases standard as they arise, including a response to the 2025 agenda consultation or in other circumstances. After this meeting, the staff will provide a draft of the PIR report to board members for review, and after considering board members' input on the report, the staff will submit it to the FAFS Board of Trustees for discussion at the trustees meeting in November. Pending the trustees' approval, the PIR report will be finalized and published. And I will now turn it over to the board to discuss questions 1 and 2 in the handout.
Great. Thanks, Ashley. And thanks, team. Well, you summarized that very succinctly. An awful lot of work went into that journey to get to that final summary. I'd also note that the draft the staff is working on the PIR process for public issuance after approval by the Oversight Committee. We'll have a lot more in there, but I did take those as the key themes that we heard. So with that, does the board have any questions or comments on the PR activities performed to date? Sue?
I guess I start. I always have a lot to say. So I think maybe I wanted to just make some comments about the roundtable. I thought it was very useful. I thought that I appreciate the folks that took the time to come to Norwalk to participate in the roundtable. I thought the discussion was a nice balance of costs and benefits on things we could improve and maybe some suggestions. So I thought that was great. Maybe in terms of your question too, feedback on next steps or process, and I wouldn't just say PIR process necessarily, but FASB process as well. I think you mentioned, Ashley, that the report will acknowledge some of the improvements we made to the pre-agenda process, in terms of making sure we have a clear understanding of what the problem is to solve and that there's potential solutions. I think it's a good reminder for us. I think that we kind of continue to be sensitive to that, because I think if we think about the efficiency and effectiveness of our process, and in particular, how long it took to finish the leasing project, notwithstanding it was a joint project, I think, getting solutions in place in a timely manner for all of our projects should be important. I think maybe just a comment on the systems discussion in the roundtable, because I thought it was very interesting to me, just from the perspective of, we had done some outreach on systems to software developers and things like that. But I thought the suggestion made by at least one, maybe more than one of the participants about how to engage maybe the preparers along with the software developers was an interesting concept, because, effectively the preparer is sort of instructing the developer on what it is that they need. And at the same time, if you sort of marry up that concept with field testing, sometimes I think, there's field testing is a word that isn't always interpreted consistently amongst folks, but somehow to get a notion of how do you think about those three things: software, think about the developers, the preparers, and then field testing, and how that might impact either how we evaluate costs or how we think about transition. So I think that was really interesting discussion, and I really think we should think about how we consider software on a go-forward basis or systems improvements that are needed. And then maybe on transition methods, I thought that was also a very interesting discussion. And to me, it was sort of something along the lines of, you can have too much of a good thing, because I do think that the board at the time had really good intentions on trying to ease the burden of transition. But because we had so many different options, you could effectively overcomplicate things. So I thought that was kind of interesting. And then maybe just a note on some of the application issues that not only were identified in the roundtable, but also at the PCC and TIC meeting. Certainly, I think, as noted, PCC has an established working group for leases. I think some of the issues that they're working on pertain to public company concerns as well, particularly around embedded leases, small dollar leases, and related party disclosures. And I think, just personally, I think if we were to make improvements in these areas, they could potentially benefit the system as a whole, and maybe be broader than just public companies. Certainly something that we'll have to evaluate when the time comes. And I would be happy for the PCC to take the lead on some of these things, but I do think it would be helpful to do sort of complementary research as it relates to public companies, so that when the time comes, we are prepared to make that evaluation, if in fact there's a solution that can be developed. And then I just want to thank again the staff for the hard work in pulling the PIR information together. And certainly I look forward to reading the report.
Great. Thanks, Sue. Joyce?
Thanks, Rich. Similar to Sue, I'd like to thank all the participants in the PIR process, including those in the recent public roundtable, and those advisors and council members who recently discussed the private company related matters. I think the work of the stakeholders comprehensively have contributed to meeting the PIR objective. The PIR process has brought to light the unanticipated costs to the financial reporting system, but it also has provided insight on the benefits to investors, notably greater transparency and comparability. And this is something that investors and other users have been searching for in the leasing space for quite some time. And we certainly have seen what the results of this standard has been towards benefiting investors. I think in addition, more broadly, the PIR helped to reveal for investors and other users the potential real effects of accounting changes on companies' business decisions. So, for example, companies may respond to accounting changes even before the standard becomes effective by engaging in business transactions, in this case, shortening lease terms, incorporating more variable lease payments in their lease contracts, or foregoing certain transactions altogether. These business decisions that are made as a result or in response to the accounting changes affect the resource allocations by investors, as well as the financial risks of the company. So I think this PIR has helped to surface what those implications might be. It's not just a financial statement issue. It is actually impacting how companies conduct their lease operations in this case. I think the PIR work over the years was quite comprehensive and robust, and the staff should continue to assess any other opportunities that are identified by stakeholders, but in a very targeted way, of course, only when the need arises, but also to work very closely with the PCC, as Sue has mentioned, as they continue their process with their working group, determine whether or not there may be broader implications beyond the private company space. And I look forward to reading the PIR report.
Thanks, Joyce. Marcia?
So I want to thank the staff for all of your work in this regard. It's been an extended activity, similar to those that spoke before me. I appreciate the input we received from all of our stakeholders. I personally found the roundtable very helpful because the participants were so vocal and candid and open. So I want to thank them not only for coming, but for the thoughtfulness of their input. You know, an observation I made as we were going through this process is I recognize that the revenue standard and the lease standard came out in a very similar time pattern. We've now gone through the PIR process on both. One of the differences there's a lot of differences between the implementation of those two standards, but in the case of the revenue standard, there was a TRG that was set up that was part of dealing with the issues that arose. And I found it very interesting that one of the observations that was made in some of the roundtable discussion is that there was not necessarily a view that a TRG would have been particularly helpful with the lease standard. So as the FASB thinks about what we're learning from the PIR process, I think it's interesting. We've done both of these in a relatively similar time frame to try and think through that aspect of implementation and when is a TRG a particularly useful and appreciated exercise and when is it not necessary. So I think that's something we can absorb as we look at our process going forward.
Maybe we can use the Cecil PIR as the tiebreaker on TRGs. Fred?
Thanks, Rich. And I would also like to add my thanks to both the staff and the stakeholders for all the feedback that we've gotten, particularly the feedback that, as Marcia said, candid feedback at the roundtable from all the participants. I thought that was great. I'll try to be additive because I agree with the other feedback that we've gotten that has been presented by the other board members. I think in terms of the investor feedback, I think Joyce characterized it well. I would say that I was actually pleased that overall we got positive feedback and a consensus that transparency is improved both from the balance sheet and from the disclosure. So I thought that was good. I think we also got a chance to understand from users the cost of lack of convergence on the standard and what they continue to have to go through in terms of those measurements. So I think that was helpful on an ongoing basis. I also thought it was interesting, obviously the cost to preparers was higher than was expected. And I think that, at least for me, I think there's a lesson there that during the process and looking back, there was an awful lot of discussion from preparers about the output and the concerns about the output of the standard. And that kind of got mixed with the discussion of the cost of implementation. And I think on a go-forward basis, it would help us to really try and separate those two to the best we can to really understand what the actual system's costs would be. So I think that would be helpful. And I go forward, I think I think Sue brought up some very good points about the work that PCC is doing. I'm especially interested in the low dollar value lease exception that could help both implementation, I believe, for public as well as private companies. Thanks.
Thanks, Fred. Christine?
Good morning. It's good to see you all dressed in pink today. So first of all, I do want to also add my thanks to my fellow board members, for the staff, for all of the hard work that you've done. You know, how many meetings was it? How many stakeholders? 1,000 some odd stakeholders over the course of this time. So great thanks to the staff, but also great thanks to the stakeholders that have helped us to understand both the costs and the benefits in the rearview mirror as we look at this. As we look at this standard. I think one of the things that I took away from the discussion at the roundtable was the mixed messaging that we get now regarding the feedback that we received, that the board received at the time regarding the dual model and whether that would be the sort of the cheaper solution or not. It seems that the feedback that the board heard at the time was that in order to mitigate cost, keeping the dual model would be the right path. But now in hindsight, it appears that that may not be the case. And I think as we look forward, it's hard to argue that the dual model isn't more costly than a single model, simply because you've got to go through the added cost of evaluating what model you're in when a lease is signed, and that comes with cost. And then you also have to do that when there is a modification to the lease, which adds cost to the modification model as well. So if there's anything I think that the board might take away from that is that there's implementation cost and then there's ongoing cost. Implementation cost is a one-time thing. Ongoing cost is forever until the standard is changed again. And maybe trying to weight those things in a way that doesn't put too much emphasis on what is the front of mind immediate cost that everybody's thinking about, which is the cost to implement the standard, and but also staying focused on the fact that those decisions that are made might reduce implementation cost, but could result in greater ongoing cost, and that there needs to be a multiple applied to that greater ongoing cost. The other thing that I thought was interesting and not surprising is that there's not a lot of desire to change things in any significant way at this point to deal with some of the ongoing cost of the standard. And I think that, we're kind of stuck with the dual model. And that does put additional costs, not just on companies, but also on investors. But that's sort of where we're at. And I think it's going to make it a little bit hard for us to deal with some of the issues where those additional costs that are being incurred are being driven by the dual model, because it's going to be hard to address that as long as we stick with the dual model. The other thing that I would hope that we would do, I think similar to Sue, when we look at some of the things that we could do to reduce cost, like addressing the low dollar value leases, that would actually bring us in closer compliance with IFRS standards. So that would help us to converge more. And I think that that's something that would be helpful not just to private companies, but also public companies. And so that might be an area where we don't necessarily want to leave it with the PCC, but perhaps the board should be considering whether to add that to our agenda and just taking care of that more directly than going first through the PCC and then deciding to expand it to public companies. But I would also support Sue's comment that if we are going to have the PCC working on that issue, we should also be doing outreach at the same time with public companies, because we don't want to have to slow down the process when it finally gets to us. And last but not least, I think that I commented the last time we talked about this, that I continuously find it surprising that moving something from the disclosure realm to recognition and measurement results in a lot of feedback from preparers and from auditors that the numbers, might not have been all that high quality when they were in the disclosures, and that there's more controls and more attention that is put to the numbers once they are recognized on the financial statements. And the comment that we heard repeatedly that there wasn't even a complete inventory of leases, which I find surprising, given the disclosure requirements. And so I think that's just a reminder for all of us that we know that disclosure is not a substitute for appropriate recognition and measurement. And for me, that's just a good reminder that that holds true.
Great. Thanks, Christine. Hillary.
First, want to thank all of our stakeholders who've participated throughout this process, and for our team for pulling together, I think, really comprehensive information as part of our roundtable, as well as the information that you've provided to the board to kind of give us that full spectrum of views, right, with regards to the leasing standard over time. I do think this was a very fulsome process, right? Getting feedback from our stakeholders from the time the standard was, issued up until now. And I do think coming through this and really getting that feedback that the leasing standard has achieved the objectives that were set forth by the board, I think is very positive from the standpoint of a lot of diverse feedback, right, with regards to the standard. But I do think at the end of the day, it's meeting those objectives. And, from an investor perspective, I think we've heard throughout this process that not all investors necessarily use the information in the same way, right? There can be different ways that it's being used, but they're still identifying that as meeting the primary objective of the leasing standard as it provided them more decision useful information. And I do think that is with regards to, having a dual lease model as well. So I don't think I've heard a lot from investors that they think we should have gone to a single lease model, right? That they're finding decision useful information with the dual lease model that we have today. Certainly, I think as part of this standard setting and as part of the PIR process, there has been identified, right, significant kind of disconnect between the information we received with regards to potential, what we thought system costs were going to be versus what they ended up being. I think that's an important takeaway. And I know Sue highlighted it and others did as well. With regards to what can we do to help kind of flesh that out as we're going through the standard setting process, right? I think that we tried certain things as part of the process, and I think that may have highlighted certain items. But certainly, I think there's more work to be done there, more work that we think about as we're going through the process to make sure that we are identifying and, really focusing on those areas, especially where we might be moving from disclosure only to recognition and measurement guidance of what those changes really mean and how those will be reflected from a systems perspective. So I do think that's important to acknowledge there was a disconnect. We acknowledge that. In the roundtable, I actually found it really great that preparers actually were very much willing to say, yeah, we gave you that information, right? And we acknowledge that that was not necessarily accurate at the time. So I think we can work together with preparers, with software providers and others, right, to try and see if we can really reduce that disconnect going forward with regards to our standard setting. One other thing I think to just highlight is, this project did have a longer tail on it, right? We had multiple exposure drafts. I think a learning coming out of this PIR process, at least for me personally, is kind of thinking about how do we deal with circumstances where we might have multiple exposure drafts. I'm sure we all hope we never have projects that have multiple exposure drafts. But in those circumstances, right, how do we make sure that we're getting feedback from our stakeholders that's focused on what are the changes in the existing exposure draft versus current gap? Right. What I don't want is kind of circumstances where people are almost providing feedback that's kind of like in comparison to the last exposure draft, I like this better, versus the feedback from this exposure draft as compared to what we have in current gap, and making sure we really have a very clear understanding of that and that we can kind of separate this is better than the last one versus how do we have this compare to the existing gap that's being applied today. So certainly, I think that those are a few of the things that I've kind of taken away from this PIR process. And I think that all of the outreach we've done has really helped to solidify some of those views. And I hope really improve standard setting going forward when we think about that. And going forward, certainly very interested in, seeing, I think I really do appreciate the work that the PCC is doing on some of the items that were addressed. I'm certainly happy for them to continue that work on those different areas. I do think some of those areas do have a potential for expansion to public companies. And I'm very interested in potential research that would help with that, such that when the time comes, we're prepared to, be able to address that. So certainly, I think there's a lot of good work being done, but overall heard the feedback that there doesn't seem to be a huge groundswell for significant changes to the leasing standard. And I think that is consistent with the fact that we think it's met the primary objectives of the project.
Great. Thanks, Hillary. So I think I started my comments with a thanks to the staff, but I'll reiterate them. You went through lots of information, lots of stakeholder outreach on our 10-year standard setting journey, and then the multiple year journey since it's been adopted. So I appreciate that. And appreciate all our stakeholders for sticking with us through that lengthy period of time. Lease accounting is interesting. In fact, if it weren't for derivative accounting, it would probably be the one that people have the most interest in constantly changing. I went back to FAS 13, and FAS 13, after it was issued, the FASB amended it almost 30 times, and the EITF amended it an additional over 30 times. And so it seems to be one of those areas that there's an appetite for answering every single question and trying to reconcile this model where I still think there's mixed views on what a lease is, an executory cost or a liability or an asset. And so there's this constant temptation to touch it. And whether it's, and as fundamental issues as putting them on balance sheet, or as I heard a little bit around the roundtable today, maybe interest in a project and taking leases off balance sheet, which we probably would need to come up with a different name for that. But I do think the PIR process works really well here. One, because I think it's obvious that there were controversial issues that the board had to deal with at the time in dealing with lease accounting. And I think we're acknowledging some of them are still controversial. And with second guessing, maybe we would have gone a different direction on one versus the other, but we're happy to point that out, get stakeholder feedback on that, and see if there is some change to be made. As with most standards, once preparers have adopted them, they really don't want us to change too much because it incurs additional cost. Even in areas like the dual model, which my recollection was that was investor driven, not preparer driven. You know, regardless, do people really want to revisit that? Maybe we'll find out what the appetite is. The other on a cost perspective is, I think from the time we added this project to our agenda till we finished it, there were changes in the 404 environment and a much more rigid application of internal controls around items that people might have considered immaterial or small in the past. How do you quantify those? And I think that might have added some cost to this process and adoption of this standard. That's something we ought to just be cognizant of going forward. To say you don't apply something to an immaterial item used to be, okay, that's immaterial, let's move on. I think a lot more process built around that, and we need to consider that in our future standard setting. How do we make our intentions clear as to practical expedience, as to estimation processes, and as to internal controls? And then the final is converged standard setting. Multinationals love converged standards. That way they only have to do it once. I think the domestic only entities probably have a little less interest in it, particularly if they think there's a different answer that they find more ideal for financial reporting in the US. So that's something we'll have to balance. Obviously, any attempt to converge requires both boards to compromise, not just one. And that can be challenging because I think when we sit at a table, we all try to come up with what we think the best answer is. And when are we willing to go to something we don't think is quite as good for the sake of a converged answer or not? So just an additional dynamic there. Like the dialogue, I think we'll learn some from the post-implementation review that our counterparts are doing overseas. And I'm sure they'll learn some from what we've done here. But with that, I think that's the final words on our PIR today. Thank you, staff, and look forward to seeing your draft report.